What if I told you that the soaring price of gold isn't just about making a few investors rich? What if it's actually a massive warning sign, like an alarm bell for the US economy that most of us are totally missing? Well, today, we're going to pull back that curtain and really dig into what gold's record prices are telling us. Okay, let's just dive right in. Take a look at this. It's a simple chart showing the performance race so far in 2025. And, wow, gold is absolutely leaving the stock market in the dust. Now, you might look at that and think, that's kind of interesting. But the reality is, this is an incredibly rare and frankly, historically spooky event. And here's why. This isn't the first time we've seen this happen. Not by a long shot. In fact, it's a pattern that's only shown up 4 other times in the last 100 years. And every single time, it's been the opening act for a major economic storm. We're talking the Great Depression, the miserable stagflation of the 70s, the dot-com bust, and of course, the 2008 financial crisis. I mean, that is a pretty sobering track record. So, if history is giving us a giant hint here, we have to ask ourselves a really important question. What on earth are the smart money investors so worried about right now? Well, it all boils down to one powerful, kind of scary concept: the debasement of currency. They're afraid our dollars are losing their value, and fast. To really get that fear, we have to start with the US government's spending problem. I mean, to put it simply, the government is spending way, way more money than it's bringing in. And this massive shortfall, well, it's the fuel for this whole fire. Let's just look at the raw numbers, right? In 2025, the government expects to collect about $5 trillion in taxes. That's the income side of the ledger. It sounds like a ton of money, and it is, but it's only half the story. Because over on the other side, the government is projected to spend a mind-boggling $7 trillion. Yeah, that's not a small jab. That is a $2 trillion chasm between what's coming in and what's going out. So there it is, a $2 trillion deficit. Think of it like this. It's basically the government running up its credit card bill by $2 trillion they don't actually have. And, eventually that bill always comes due. And this is the crucial part. That $2 trillion hole doesn't just disappear. It has to be filled by borrowing money, by issuing brand new debt. But who's lending the government all this cash? Well, it's an interesting mix. First, you've got regular folks and big institutions buying government bonds. Then you've got foreign countries, think Japan, China, who are huge lenders. But then there's the big one, the Federal Reserve. And they have a superpower that no one else does. They can literally create new money out of thin air to buy this debt. All right, let's move on, because all of this borrowing and, let's be honest, money printing has a direct consequence for every single one of us. It's called inflation. It's how Washington's spending problem connects directly to your wallet. Now, most of us think of inflation as prices just going up. But that's just the symptom, right? The root cause is the inflation of the money supply itself. Think of it like this. You got a pizza with 8 slices. If you magically create 4 more slices without making the pizza bigger, what happens? Each slice is now smaller. It's the exact same with money. The more dollars they create, the less each one is actually worth. And the result of that weaker dollar is something we all feel every day. Your rent goes up, your grocery bill is suddenly shocking. It takes more of those weaker dollars to buy the exact same stuff. And maybe the worst part, the savings you worked so hard to put away, they just buy you less and less over time. And this brings us right back to gold. When smart investors see this happening, they scramble for a safe place to put their money, to protect their wealth. And gold is seen as the ultimate safe haven, because unlike paper money, you can't just print more of it. Its supply is finite. But hold on, because the story doesn't end there. Right now, there are 3 really big risks developing that are pouring gasoline on this fire and making the whole situation way more urgent. So risk number 1 is something called gold revaluation. Now, this sounds complicated, but it's not. The Federal Reserve has actually discussed just changing the official price of the gold it already owns to a much, much higher number. This would basically let them create hundreds of billions of new dollars with just a few keystrokes. Look at the sheer scale of this. It's wild. It's like finding a winning lottery ticket in an old coat pocket that's worth $850 billion. They're not creating any new physical gold, just poof, a new value appears on a spreadsheet that they can then spend into the economy. Okay, risks number 2 is de-dollarization. You're probably hearing this term a lot more lately. Big global players, especially countries like China and Russia, are actively working to stop using the US dollar for trade. For them, it's a strategic move to get more control over their own economies. So, why does this matter to you? Well, the dollar's value is propped up by global trust and demand. If that trust starts to fade and countries stop needing so many dollars, our dollar gets a lot weaker. And that means everything priced in dollars, your savings, your investments, is worth less. It's probably no coincidence that these same central banks are buying up physical gold faster than they have in decades. And finally, the third risk is what economists call the deficit spending trap. Basically, after years and years of relying on borrowed money, the US is now stuck between a rock and a very hard place. There are no easy choices left. And I mean, look at this impossible choice. Option 1, they could slam on the brakes and dramatically cut government spending. That would help with the debt, sure, but it would also rip a massive hole in the economy and almost certainly trigger a catastrophic recession. Or there's option 2. Just keep the spending train rolling. That keeps things looking okay in the short term, but it guarantees more money printing, higher inflation, and your savings continuing to lose value. It's a terrible choice. So, after all that pretty grim news, what does this actually mean for you, for me, for all of us? The whole point here isn't to make you panic. It's to shift our mindset from fear and toward preparation. So, the key takeaway is really this: don't run for the hills. The goal is to understand the landscape we're operating in, to become a more aware and financially savvy citizen. And that's going to mean different things for different people, right? Maybe it's diversifying your investments, or maybe it's just really focusing on paying down debt. The point is to take control of what you actually can control. You've probably heard that famous saying that history doesn't repeat itself, but it often rhymes. And that's exactly what we're seeing. We have seen gold send this exact signal before past economic storms. The patterns of spending, of debt, of currency devaluation, they're all there, and they are rhyming with the past. And while nothing is ever guaranteed, those rhymes, they're a warning worth listening to. And that just leaves us with one final question. Gold has been trusted for thousands of years as a store of real value. So when it starts to so dramatically outperform everything else, we just have to ask, is the economic alarm bell ringing? And if it is, are we ready to answer the call?